Hi and welcome to the Tip TV and TradingView show. I'm joined here today by Alejandro Zambrano. He owns Londinium FX. Alejandro, how are you?
Very good, thank you. How are you?
Yeah, not too bad. So this week, how you been doing?
Been interesting, obviously a little bit boring to be honest. Not a lot of activity. Obviously Bank of England is out today and we'll see some action there, I guess. And otherwise it's been a little bit boring. You need to be quite picky.
Yeah, I mean, I think the markets have been pretty poised for the Bank of England decision. Obviously,
Yeah.
we've just seen it come out. 60 billion asset purchase program added.
Yeah.
And also a 25 basis point cut.
Yeah. Obviously, well, we need to see first what happens to price action because on the run-up of this, everyone priced in that rate cut. And so bond market traders are already positioned for this. Obviously, that extra asset purchase could potentially give us a bit of a bearish bias, but because bond markets and currency markets are necessarily positioned for it, I'm not really sure exactly if it's the best time to sell. So in a situation like this, I would usually just wait a few hours to see where we land, and then just use simple price action. You know, break below, I think it's a low at 130.50 or so. You know, that can open up for the climb to 125. You got some banks saying that 125, 126 is a good target, and by the end of the year. But if we don't break that level and we go back to the range, then I'm probably just going to look to go long again for a bit of a bounce.
Yeah, I mean, I think probably above, if we get a sustained break and hold of maybe above 1.33 and a half. That's
Yeah.
what I'm probably looking for, you know, a continuation of a bullish move. But I mean, it is very, very interesting because I don't actually think the Bank of England should have cut. I think that they've done it purely to sustain their rhetoric of, you know, having to try and ease the economy.
Yeah.
Completely. And if you look back at the past 8 years, low interest rate policy hasn't really worked, has it?
It hasn't. I mean, it hurts the banks, and there's more and more reports on that, how it's going to hurt UK banks. And now, as they have cut, it's going to hurt the profitability. You look at the European banks, they're not doing good at all.
No.
So I agree. I don't think it's necessarily going to be something that's going to help us too much anyway. Because see, every time you lower the interest rates, the idea is that, you know, people are going to spend more. But now, okay, of course, homeowners will have less of a burden to pay on the mortgages, but they're not necessarily going to take all that money and start to spend it if they believe, like now, that we're heading towards a slowdown. They'd rather hoard that money, save that, pay back on the debt. So I don't necessarily think it's going to boost economic growth in any way.
That's it. And I mean, if you look at the London housing market and the stock markets, I think all that QE has really done is just continue to bolster those and support those. But
yeah,
let's have a look at our first chart today. So we've got WTI from John Quid. Now, I think WTI is quite an interesting market at the moment. What do you reckon?
I agree. I mean, I was bearish from higher levels. I think it was 46 or so when we started to break down below that range. And we come down a healthy clip. And, you know, above that low there, which is the April low, and that would be 35, 36?
Yep.
I think we're not going to extend much lower below that level. So where we are right now, as John Quid is I guess, telling us, is that we should look for a low somewhere at these levels, and I don't disagree.
What do you reckon? Is it a crowded trade or to the downside, or?
It's hard to tell, really. What do you think?
I think net positioning, I think it is still quite a crowded trade, and if you look at it from a technical perspective, there is a massive inverted head and shoulders there as well, if you look at it on a daily or a weekly, and that's where I was kind of getting bullish from.
Yeah.
From just above $39. But I think we had the bounce yesterday. It's come off slightly today. We're trading at about $40.30. But still, I'd still remain bullish above $39.
Yeah, the way I operate is that I don't just go long like that, especially not something like this. Remember, it went from, you know, 120 or something down to 25. And this was 2014, and everyone said, oh, this is the low, this is the low. So people love to fade these type of moves, but unless you know what you're doing, you know, you've done some statistical analysis, or you have a very good view about what people are doing in the industry, like there's obviously crude oil traders that are really good at this, then just buying outright like that, I wouldn't do that. What I would do is I would just wait for a few days. you wait for that to stabilize, and then if you have a break to the upside, you can go for that.
Absolutely. Okay, let's have a look at the next slide now. So dollar yen, again, another interesting market.
Yeah.
Thoughts on this?
I was actually bearish at the highs there, and we moved all the way down to what this author says is the demand zone. And if we have been short over the last few days following that, or before the Bank of Japan rate meeting, then I do think this is a good level to book a profit.
Yep.
But because it's a downtrend, as the author says here, on a break to the demand zone, I would look to short as well. Now here it's up to you really what you want to do, but because it's a downtrend, you know, unless we have very good reasons, I wouldn't be buying here. This is again a very typical error that a lot of retail traders do, is that they want to buy and sell and they want to do everything. Why not just chill for a few days?
Exactly.
Let this go up, and then because it's a downtrend, you sell at that trend line.
Yeah, there's no point in kind of playing against the probabilities, are there? If you've had a bearish market for this long now, since probably what, December-ish.
Yeah.
You're not going to want to try and fade any further down moves.
I mean, you could. And this is because the reason why I'm saying this is because I was working for FXCM since 2009.
Yeah.
And the standard chart that I would receive, because I did big seminars, I met a lot of thousands of people. The standard setup is something like this. You buy from the low. It's just the way it does. But we know that the average retail trader doesn't make any money.
I mean, I guess if you're playing it with your strategy, you've back-tested your strategy, you could do something like that. You know, there are a lot of people that do like to fade moves. However, I agree with you. In my personal opinion, you should normally keep with the trend because it just plays with your edge. It adds to your edge, doesn't it?
I agree.
Okay, can we have a look at the next slide?
Yeah.
Euro dollar, another interesting chart. Let's see, we've got a little bullish flag there. What's your thoughts on this one, Alejandro?
Yeah, so this is a weekly chart, right? Published 2 days ago. So I guess what they need to do here is to wait for the close, right? So tomorrow's non-farm payrolls, and maybe if it would break out higher, it could potentially move up. Now there's some people, I think Morgan Stanley are long, and they do a target about 117, and their rationale is that inflation-adjusted yields are supporting this pair, and the fact as well that the Eurozone exports much more than the import. But for me, when it looks like this, it's not really that clear. I wouldn't necessarily get involved, but I understand what they want to do here.
Yeah.
And I guess if they want to trade this, yeah, it's a weekly chart, and just wait and see if it breaks the level or not. But I wouldn't trade it. I don't think it makes sense.
Yeah, I think I'd want to see a break and test of that 116 level. So a break above, come down, test it as support, and then see what price action's doing there on a longer time frame.
Yeah.
To see if you can get a sustained break higher. But on a monthly, this is very interesting as well, actually, because I think even looking from about 2010, 2009, there's trend lines that go all the way down and actually touch that point right there. So yeah, another interesting chart.
What I usually do in these situations, because I've been doing this for quite some time now. So 2014, from the high in May all the way down to April, I had huge returns just because it was so simple, that downtrend. And since then, you know, you start to get involved. You know, I did try to short that, you know, at the highs here in 2015 and so on. But after that, when things just turn choppy like that, my personal view is just ignore that currency pair. So this is something I think I traded 1 or twice, or say maybe 3 times, like strong views over the last year. So the trick is to, where's the next move like that 2014 move gonna be? And there are stuff moving, and the pretty much only thing moving right now is actually dollar South African rand, where you had a nice break last week, and it's been going down lower, and that's something you may check out.
Yep, no, sure. Okay, finally we've got, I think, the S&P 500. Now I actually quite like this chart. I've never seen something displayed like this previously as a domed house pattern, so I found it quite interesting. But I can definitely understand the rationale here with the bear trap and the bull trap at the highs.
Yeah.
What's your thoughts here?
I don't really know so much about the 3 peaks, first floor, and all of that, but I mean, we was heading up higher, right? And that was due to higher, better than anticipated data from the U.S. And then you have that you've been having a reversal now, and from the low here in June,
Yeah.
it's quite a nice gain. I think it's like 9.6% or something like that. So a little pullback down to support wouldn't surprise me.
No, not at all.
But a big plunge like that, I wouldn't anticipate that, but you can probably go short. Look for it to come down a bit. Do that for a week or two.
Absolutely.
But big plunge right now, I would like to see the break of the June low
Yeah.
to get involved with that.
Good rationale there.
Yeah.
Alejandro, thank you very much for joining us today.
Thanks so much for having me.
That was the TradingView show. Join us after the break.